Jamaica is a highly prospective target area for different kinds of deposits in an island arc terrain.
As probably the most widespread, intensive, and in-depth exploration program that's ever been carried out in this island.
5 or 6 years worth of work into just 2.
No one else has ever done this before. There has been historic work on the island, trending back 150 years.
I think they're getting excited, as we are, so stay tuned.
Hello and welcome to our Mines and Money 5 at 5 show, which today is sponsored by Kingston Resources, Zenith Minerals and Flynn Gold, and is brought to you in association with Resource Global Network. For those of you attending 5 at 5 for the first time, the aim of 5 at 5, 5 guests at 5 p.m, is to maintain engagement between investors and miners through a lively interactive format whilst we wait the return of physical events. A few admin announcements before we start. To make the sessions interactive as possible, please have your videos switched on. And then to ask a question, you've got 2 options. You'll see where I put hi there, and you'll see in the chat screen at the bottom. That's where you can post a question or post your comment to any of the panelists that you'll hear from today. And you can also go and click on the invite participants button. We can then unmute you, and you can then go and ask your question live. For today's show, we have a great line of guests. They are Andrew Corbett, Managing Director of Kingston Resources, Peter Bird, Chairman of Zenith Minerals, Sam Garrett, Executive Director of Flynn Gold, and Angelos Damaskos, Chief Executive Officer of Sector Investor Managers, and your host, and to kick things off, David Baker, Vice President of Business Development of Elemental Royalties, and also a member of the London Mining Club. Over to you, David.
Thanks, Andrew, and good morning, good evening, everyone. Yes, as Andrew said, I'm VP Biz Dev of Elemental Royalties. We are a TSXV listed gold royalty company with a diverse portfolio of producing and under construction assets, focused on precious metals and operated by large cap miners, including Endeavour, Equinox, Zijin, and Capricorn Metals. But I'm here on behalf of the London Mining Club, probably know it's better as the AMA. And in normal times, we would host regular presentations, seminars, masterclasses with senior company and industry representatives, hopefully getting back to normal as soon as possible. So 3 companies we're going to look at today all have a focus on gold. So best that we start off with a gold-related question. And I guess it's the question everyone wants to know: what is the price of gold going to do by the end of 2021? And you've got 5 options there. Less than $1,700. I hope no one chooses that. And then all the way up to $100 increments, all the way up to over $2,100 an ounce, which would be great for the world. So, or maybe not great for the world, but great for mining companies. So let's see where you go there. And while we're voting, maybe you could introduce the other panelists. We've got Angelos Damaskos from Sector Investments. Angelos, where do you think gold's going to be by the end of the year?
Yes, obviously I run gold-focused investment funds, so I'm a little bit biased, I have to say, but I have been a gold bull for a while, and I think, in my view at least, I have never seen such supportive conditions for precious metals for a very long time in my career. And the unfortunate effects of the pandemic are evident on the balance sheets of the major central banks, in particular the Fed, the Federal Reserve in America, and the ECB balance sheets have exploded exponentially. And that has to be matched by a significant amount of money printing, which would have the effect of debasing or devaluing the main currencies. And on that basis alone, precious metals become very attractive as safe havens and stores of value. Now, coupled to that, we have the clear statement, particularly from the American Federal Reserve, that they intend to keep interest rates near 0 for the next 2 years at least, whilst at the same time allowing inflation to creep up to the 2% or even higher target. Therefore, they are quite happy to see the face value of all that debt accumulated being diminished by the effects of inflation. And at the same time, they realize that they will not have much opportunity to raise interest rates for fear of destabilizing the economic recovery after we exit from the effects of the lockdowns and the pandemic. So with that scenario in mind, it's the traditional and historically correlated recipe for higher precious metal prices. So now it's interesting that in the last 6 months, we have seen a significant weakness in gold and precious metals in particular. But that was after we saw a new all-time high back in August. So in my view, it is a little bit of a distraction due to a distraction of investors to the economic recovery, the recirculation of capital into the recovery sectors, recovery industries. And some people think that perhaps it's no longer necessary to hold precious metals as a safe haven because of this economic recovery. But once the macroeconomic picture becomes more solidly and better understood by the investment community, I expect interest in precious metals to return. So my expectations is that we will see again the previous all-time highs of over $2,000 within the year, this current year, and possibly exceed it either late this year or early next.
So Angelos, then how do you position your portfolio to take advantage of that bullish precious metals environment that you expect? What sort of split between the explorers, the developers, and producers how do you put that portfolio together?
Well, we have always focused on the smaller end of the spectrum, so the mid caps to smaller cap companies. But over the last year and a half, we have been repositioning the majority of the portfolio into what we call brownfield development projects. Projects that have an existing resource, that are working towards expanding the understanding or the development of that resource, and possibly adding value through exploration drilling, but also those that have historic past producing operations that can be brought into production fairly quickly. It is clear that the large and mid-cap producers are now flush with cash. They don't know really how to deploy all that free cash flow they are accumulating. And the question of growth is coming on the agenda firmly and much more importantly, pressed by investors. Where is the growth going to come from? And as long as they don't have organic growth, either through developing their existing projects or regional exploration, they're going to have to look for acquisitions. And the brownfield projects are the easy pickings that have a clear sideline to production. So that's I believe the sweet spot of the market over the next couple of years as the corporate activity intensifies.
Fantastic. And how do you feel geographical diversity plays into there and sovereign risk? Have you got your specific strategy there, or you got a global approach? We have a global approach, but we've always avoided politically unstable territories. We feel we take significant risk with the commodity volatility, not to add another layer of political uncertainty, which is very difficult to quantify anyway in any valuation model. So we are pretty happy concentrating the majority of our portfolio, approximately 30 to 40% is North American operations, and the balance is split between Australia, Latin America, and West Africa. Still, in terms of precious metal split, we split approximately 1/3 into silver mining operations and 2/3 in gold mining. Oh, very sensible. Angelos, thank you for that. That's very insightful. Maybe we could have a look at the results of the poll and see what the community think. Oh, round about in the middle. So $1,900 to $2,000 gold. So I think sort of feeling similarly to you, Angelos, and that was what I picked as well. So hopefully seeing gold getting a bit higher than where it is today. Thank you everyone for the vote there. We might move on to our first mining update of the show. I'd like to introduce you to Andrew Corbett, who's Managing Director of Kingston Resources. He's operated in the mining industry for 22 years and was previously portfolio manager at Perpetual Investments and the general manager at Orica Mining Services. Over to you, Andrew. You've got 3 minutes to present, followed by some Q&A.
Thanks, David, and appreciate your time, everyone. And I'm here today to talk about the Misima Gold project, which Kingston moved to 100% ownership today, and we commenced 3 years ago on a 49% earning. And the picture you see there in the slide is the placer operated mill that ran for 15 years at Misima Gold Mine, and so that gives you a bit of a feel about the brownfields nature, Angelos, of Kingston. So we're basically in the process of drilling and approvals and feasibility work for redevelopment of the Misima gold mine in PNG. It operated for 15 years and produced 3.7 million ounces of gold and 22 million ounces of silver. We currently have a large resource of 3.6 million ounces of gold and a reserve of 1.35 million ounces of gold. So, like I said, 100% of a 1.35 million ounce reserve, which is still growing. I'll just get you to move forward, Elaine, thanks. Next slide. Sorry, back one. Yeah, thank you. So look, the feasibility was recently published in November. It's a large-scale project. We've got a 17-year mine life. You can see there 130,000 ounces per annum and Australian all-in sustaining of 1159. All these numbers are Aussie dollars. Very attractive NPV of 822 pre-tax, that is 822 million Aussie and 33% IRR. It's a substantially de-risked project. So metallurgically, it's very well understood. It operated for 15 years. Geologically and engineering-wise, we understand how the project works and operates. So it's got a lot of advantages being that sort of brownfields redevelopment. Next slide. Just a quick one on where it is. It is an island. It's not part of the mainland or on the highlands where a lot of the problems do occur with, some landowner issues and things like that in PNG. It's a very peaceful and matriarchal society. So just like most of us at home, when the ladies are in charge, it's very peaceful. So that's the way it is at Misima as well. So it's a very nice place to be. Logistically very good to get to, both air and sea access to the island. Next slide. And just the final slide here, just basically the main point to pick up here is Yamuna is 33.3 of our 3.6 million ounces. So it's a very simple project. We have 2 pits, 1 single haul road. It's a large scale open pit. It's 3.5 kilometres long, gets up to 400 metres deep in some sections. It's a simple CIL processing plant, 5.5 million tonnes throughput, which is exactly what Placid did for 15 years and operated very successfully and highly profitably. So we look forward to producing a feasibility by March next year. That's a definitive feasibility, publishing a new reserve and resource update this year. And we have 2 diamond rigs running 24/7 at the moment on the project. And I'll hand it back to you, David.
Thank you, Andrew. Bang on time there. Appreciate that. I'll hand over to Angelos some questions in a minute, but I might just lead off with one myself, if you don't mind. What's it'd be really interesting to see that you're not on the mainland. What are the relations like with the Misima people there? Clearly, there's a history of mining on the island, but how do you manage that day to day? And yeah, how do you do something that's such a critical part of your social license to operate there? What's been your experience to date and going forward?
It's been excellent. So I actually refer to it as our social license to explore because at the moment we're drilling holes. We have 100% support. We've never lost one day of drilling from any community problems. We've got 100 Misimans now working for us on the island doing exploration, running our small camp facility. So it's working very, very well for us. And they're a mining culture. They've been mining gold for 100 years. Over 300 Misimans still do fly in, fly out. They're people that were trained by Placer who operated in the mine. So it's been no problems at all, and they're very supportive.
Perfect, thank you. And just a reminder, if there's any questions for Andrew there, you can put them in the chat box. But Angelos, I might hand over to you if you've got any questions.
Yes, thank you, Andrew. Just a contextual question, really. Can you describe what happened during the Placer ownership? Why did they suspend operations? And obviously felt the economics at the time were uneconomic. And what have you done since to improve the economics? It's clear now from the feasibility study you have produced that it's a fairly attractive economically project, but what has changed from historical operations?
Yeah, it was in 1998-99, they were due to do a cutback on the main pit and on the current gold price at the time, and the Placer Dome forecast gold price, which was US $300 an ounce, it wasn't economic. So it really was closed 100% due to the gold price. So they closed the mine in 99 and then continued to process stockpiles for another 4 years. And they continued to obviously make good money during that period. But at that low gold price in the late 90s and early 2000s, it wasn't worth going ahead. And during that period was also when Barrick came in and took over Placer. So there was a lot of corporate change and change of strategy as well.
Right. But then we had the ensuing first leg of the bull market in gold and commodities that lasted up until 2012. Why was this project left behind?
Oh, it was a very interesting reason because it was corporately owned by a joint venture with some Japanese partners who were exploring this for copper. So no one was focused on the gold that was left, and they were trying to look for the copper, deep copper porphyry at depth, which no one's been able to find. So obviously, when we came in, we switched that strategy straight back to gold. Right.
Okay, thank you.
I've got another couple of questions here as well. Andrew, I just noticed that you're quoting pre-tax NPVs. What's the fiscal arrangement there, and can you shed a bit more colour on that?
Yeah, well, the post-tax NPV is also in the presentations. I just took that slide out. It's 535 million Aussie post-tax. So it's a 30% corporate tax system, same as Australia. There's a very small offset for social expenditure, but really it's 29-30% fiscal ratio.
Gotcha.
And 2.5% royalty, so 2% state royalty and 0.5% production levy.
Okay, it's not too onerous there. A question from Robert in the comments: have there any COVID-19 problems in Misima or PNG in general? And then the follow up there is when you think your final investment decision?
Yeah, so COVID is a challenge in PNG across most of the mainland. We haven't had any reported cases at Misima, and we work, so there's 20,000 people on the island. So we work very closely with the hospital to monitor any sort of increased illnesses or people coming into the hospital being sick, and it actually has been really flat to stable on Misima. So touch wood, COVID hasn't got to the island. But it is on the mainland for sure. There's plenty of challenges there. So we only have 2 expats, so they have to do quarantine in and out, obviously, and there's restrictions around travel right now as well with Australia. And sorry, what was the other question?
Yeah, just the final investment decision. So I think you got a DFS coming later in the year. So if you post that, but just timing around that would be helpful.
So DFS out sort of Q1 next year, so Q1 22. And just FID decision end of 22 into early 23.
Fantastic. And then another question. Tell us a bit about the board and maybe the management team as well. And
when we published the PFS, Mick Wilkes, who was the former managing director of Oceana Gold, moved to chairmanship of the company. Mick was already on the board because of Misima. He joined our board in 2018, and Mick's built 4 gold mines, so that experience is invaluable on our board. So I've operated and managed gold mines, but not built them. So it's really important to have that skill set on the board. We also appointed recently a new approvals manager, and his name's Jeff Callister, and he's an Australian-born gentleman, but he actually has lived on Misima since he was 10, and he worked for Placer at the mine. He's worked at Lahire, Porgera, Misima, and Freda River. So, and he's a approval and community specialist. So we're really excited about his joining us, and we've actually been talking to him for 2 years about coming on board to help with the approvals for Misima. He knows the landowners better than no one knows them better than Jeff, basically.
Fantastic. Thanks, Andrew. Angelos, you got any follow up questions?
Not for Kingston. Thank you.
Okay, maybe just to use up the remainder of our time with the DFS, what savings or enhancements are you expecting to see there? Is there any potential capital savings? Maybe something, I know you can't, it has to be high level before you release, but where would you be targeting savings, both on what's already quite a reasonable capex number, and then where would we look to see the gains?
Look, too early to comment on savings at this point because we're really only just getting into it. So I don't want to speculate on any savings at this point, but the gains are there's a very natural point in the current mine plan after year 3 that the mill could be throughput could go up. So in the first 3 years we're mine constrained, but from year 4 on we're mill constrained. So obviously with that large resource and long mine life, we'd obviously be hoping to see that throughput lift up as you obviously hit that 4-year mark. So at the end of year 3, we're doing 150,000 ounces per annum. So ideally it'd be good to hold that number through for the rest of the mine life. And there's we're currently only got 80 million tonnes into our production target, and there's still another 60 million tonnes of inferred to be drilled. So there's a lot of tonnes, a lot of scope for expansion.
Then another question from the chat. Just maybe talk through the experts that you have on site and what they cover, I guess, across the different speciality in the different fields, and if there's any requirement by law, I guess, in PNG to what expertise they might need to have.
Yeah, so we've got safety officers and safety experts for both the drilling contractor and for us. Geologically, we have exploration manager and a team of geologists. We have 2 geotech engineers, obviously lined up for the geotech drilling program, and we have an operations manager. So that's the technical team on site. Hopefully that covers that question.
Perfect, Andrew. I think that's it. We're out of time. Thank you for that very comprehensive presentation.
Thank you, guys.
Appreciate your time. So moving swiftly on, we're going to have our next update from Peter Bird, who's the chairman of Zenith Minerals. Peter is a highly experienced mining industry executive with experience in major mining companies such as WMC, Newmont, Normandy Mining, as well as experience in the equity markets with Merrill Lynch. So Peter, I might hand over to you for a 3-minute presentation followed by Q&A.
Thank you, David, and thanks for the opportunity to speak to everyone today, wherever you are in the world. A little bit of a different story to the one you've just seen, where Zenith Minerals is what you would call a micro cap, capitalised at about 40 million Aussie. In the past 8 to 10 years, the team, when no one was really very interested in the resources space, has put together a very strong portfolio of projects, which luckily for us, with the whole COVID thing within Australia, so we've been able to evaluate them pretty aggressively in the past 12 months. Our strategy is very clear. It's gold supported by base metals, the principal base metal being copper. And we're currently actively drilling our 3 core projects. So our 3 core projects within Australia, which we own 100%, are the Red Mountain Gold Project in Queensland, the Split Rocks Gold Project in Western Australia, and then the Devlin Creek Base Metal VMS system in Queensland. So I'll just touch on each of those reasonably quickly, given time commitments. Red Mountain is a virgin discovery, so it's amazing, even in a country such as Australia that's been heavily trawled over for projects. It's not an old mine camp. It's a virgin discovery in Q1 of last calendar year by the team. It is what's called a breccia pipe system. So for the listeners, the best way to think of that is a vertical baguette or cigar in the earth, and quite an interesting proxy in the immediate region is the Mount Wright gold deposit, which was exploited for about 1 million ounces by Resolute some years ago. So our objective there is very clear. We've begun diamond drilling that project. We're now drilling down to about 300 vertical meters. Just around Christmas time, we announced quite an interesting hole down to about 120 meters that had 5 occurrences of free gold in it. So clearly what we're trying to do is see if we can extend this baguette or cigar to depth, so up to potentially 1,000 meters if it holds together. But of course, drilling is a great revealer of the truth. So we'll have to stand by and see what we can find there. But of course, if that is the case, this is a real company maker. So we're pretty keen to just chip away at that for the remainder of this year. So you'll see results continuing right through to the end of the calendar year. If we move to Western Australia, Split Rocks is quite a different proposition. Split Rocks is a large volume, low grade, what would potentially be open pittable Archean gold shear system. So, you know, I'd urge people to have a look at our most recent deck on our website. But what we're trying to achieve there is a slightly different concept, probably a number of near surface resources is our objective, which we could then exploit via open pit mining. So again, we've been drilling that quite actively since about the middle of last calendar year, and we continue to drill it, and results have been ongoing, and people will see those if they refer to our deck. And then lastly, whilst I recognise it's a gold discussion, I'll touch very quickly on Devlin Creek. So Devlin Creek is a VMS system. The objective there is to improve upon the current JORC compliant resource we have, which is about 2.5 million tonnes. And if we can sort of get that up into the 10 million tonne type target range, you know, we've got a ball game. We've got something we can deal with commercially. So it's a bit unusual, sort of just in closing off, to have a company capitalised at circa 40 million bucks Aussie with 3 very real projects. It's not moose pasture. We're actively drilling. We've had success, and I'd sort of just urge people to watch the space, you know, through to the end of this calendar year. And that, frankly, that's why I joined in April of last year. I could see that the technical team have put together an exceptional portfolio. So I think with time commitments, I'll stop chatting, and if there's any questions, I'll try and deal with them.
Thank you. Thank you, Peter. It was yeah, very, very interesting. Maybe I'll just kick off with a question on Red Mountain. Very unusual, you say, to have a greenfield discovery in that part of the world. What's the history behind the project? Was there how much work's been done in the past? What was sort of exploration techniques to identify the deposit?
Yeah, so it's a pretty easy one to answer. There's no previous work up until the team running soils over it very early last calendar year. So there was no previous history, no previous work. I mean, that part of southern Queensland has been very fertile for some exceptional gold deposits like Mount Lord, Krakow, which I was involved with at Newcrest, and Mount Wright, etc., etc. So it's very fertile. Getting on and doing business in that part of the world is a fairly systematic and good process. And I'm sure if that same project area had been in Western Australia, it would have been trawled over many times before. So look, a little bit of good luck there, I think.
Absolutely. Angelos, I might hand over to you if you've got a couple of questions for Peter.
Thank you, Peter, for the presentation. Very interesting to see this portfolio of projects. The question that arises obviously is how do you allocate resources as a small company between the 3 projects? How do you prioritize, and what is the strategy? Is it to develop all 3 projects yourselves organically, or do you intend to invite joint venture partners or farminees to come and help you with the process? And finally, secondly, rather, in relation to this allocation, what does your treasury look like at the moment? How much cash do you have to deploy for your projects?
Yeah, okay, thanks, Angelo. So I'll deal with the last one first. We've got cash reserves of just under 4 million Aussie, and with the budget and work program we've got planned well into the 3rd quarter of this calendar year, that's sufficient. That'll get us through the planned programs, which sort of leads into the second question. The allocation of time and resources at the minute is approximately a third on each one of those. My sense is that will probably change a little bit as we progress through the year. The 2 gold projects from a technical point of view are somewhat simpler than a VMS system. So it wouldn't surprise me if we continue to have drill success on the 2 gold ones, that they jump ahead a little bit in the activity levels and the work programs until we, it's usually, you've got to make haste slowly with VMS systems until you fully understand them. So I think from a timing point of view, that's how that will work. With respect to joint ventures or how will we do it, I think we have an open mind about how we generate value for each of these projects. You know, if it makes sense to joint venture, we'll joint venture. If it makes sense to build it ourselves, we'll ensure we have the expertise on board to do that. and I've personally been involved on that side of it. But as I think Andrew just pointed out, you need the skills on board to do that at that point in time. So I think our first step is, can we define commercial grade metal inventory or resources on 1, 2 or 3 of these projects by the end of the calendar year? I think then we're in a strong position to say, well, what's the best pathway to take for each one of them? Hopefully that answers your question.
Yes, no, absolutely. The obvious question is, how far can you get with approximately $1 million spent on each project in terms of drilling and defining the resource and relevant studies?
Yeah, I think each one of them is a little bit different, and obviously we don't have the time today to go through it in detail, but I would say that the gold ones, you'll get well down that path for early stage definition if we're successful and continue to find stuff that is commercial. I mean, that's pardon the pun, but that's the $1 million question, right? So it'll get us well down the path, and probably to preempt maybe the next question, when you're an explorer at this end of the market, you're always spending money, not making money, but your spend is really directly related to the success you have down the journey. If you're totally unsuccessful, the spending stops and the performance stops. So we've just got to push to be successful.
Sure. Thank you.
Thank you, Angelos. Peter, just a couple more questions from me, and a reminder, if there's any more quick questions from the audience, please put them in the chat. Maybe you could elaborate a bit on the team you've put together and what kind of team you need to develop 3 projects or advance 3 projects at the same time?
Yeah, so the team is, because of where we are in the life cycle, is very much dominated by exploration expertise led by Mick Clifford, who's the CEO. So and the way we split the roles currently is that Mick looks after all of the technical on-ground work and the evaluation and maintenance of such. And then because activity levels have picked up within the business over the past 6 months, I've assumed the role of executive chairman to do this sort of thing and the other corporate pieces. I mean, clearly the next step is, if you start to have success to the point where you can create a resource on one of these projects, we'll either have to hire or bring in expertise, which is not an uncommon theme. We recognise that expertise is not in-house at the minute, and you've got to, with these businesses, you've got to morph for your state of life, as actually Andrew just referred to. Having Mick on board there, having built projects before, is exactly right. I mean, that's what you have to do at that stage in the life cycle.
No, absolutely, it's inevitable, isn't it? And then just one last thing. I know we're focusing on gold, but I couldn't help but notice on your website some lithium potential at Split Rocks. Maybe just a quick 30-second elaboration on what could be there.
Yeah, so very quickly, what we had to do, because we are a small company, is focus our strategy on not everything in the portfolio, but what we believe we could hit a home run on. There is some lithium, and in fact, if you look at our results, our announcements recently, you'll see we've just done a transaction with a company called Bradderhead, who we were joint venture partners on assets in the Americas. Now we've assumed a 15% ownership of their headco, and they're running the assets. So we like lithium, but we can't do everything. So we've taken the gold, copper strategy, and we'll try and deal with these other things along the way.
Very, very sensible, Peter. Thank you very much for your time. We are out of time. So we will move on to our final update, and we have Sam Garrett, who is Executive Director of Flynn Gold. Flynn Gold I'm not familiar with, but I'm looking forward to learning more about it. I believe is an upcoming IPO targeting listing later this year on the ASX. So Sam, it's over to you.
Thanks, David, and thank you for the opportunity to speak today, and thank you everyone for joining. Flynn Gold is a public unlisted company in Australia, on the verge of IPO. We're looking to raise $7 to $10 million with a pre-money valuation of around about 9 million Australian dollars. Our projects, we have 2 sort of key projects. The principal one is in northeast Tasmania, and that is essentially an analogy of Victorian orogenic gold belt. And our second sort of project centre is in the Pilbara of Western Australia, adjacent to the emerging Hemi project. In Tasmania, it's been, northeast Tasmania rather, it's been well understood now that the geology is a direct analogy of the Lachlan Fold Belt. We have the same Ordovician turbidic sediments, we have the same Devonian granites, we have the same mineralisation styles. But what is key for us and what we think is the opportunity that we can leverage off is the top bar there. You can see on the left the historical exploration expenditure across both sides of the strait. In Tasmania the last year, only about $1 million has been spent on exploration, and that's been principally by us, whereas in Victoria over the equivalent time period there's been about $81 million spent. And that is pretty much reflective back in time as well. In Tasmania, in our project there, we have the benefit of getting in pretty early. We have a large tenement position, almost 1,200 square kilometres. We've had the time to sort of cherry pick the best projects, and we've critically got mineralisation style optionality. If we could go to the next slide. Besides the typical Victorian sort of orogenic style gold systems, we've also got large scale bulk tonnage intrusive related gold projects. And this is highlighted by this project, the Golden Ridge project, and in particular the brilliant prospect at Golden Ridge. Historical drilling has at Brilliant has been targeted over only 150 metres of strike of what is essentially an 8-kilometre long gold anomaly on the southern margin, contact margin of an intrusive granodiorite into the Ordovician sediments. You can see from the panel on the left-hand side that mineralisation is open in pretty much all directions. Grades tending to get higher with depth, which is encouraging. What we don't see on that slide is that on the other 4 kilometres to the east, a one-hole program drilled in 2014 intersected bonanza type or bonanza grade gold within the granite itself. And we think that's sort of key to our story, is that whilst most of the mineralisation, historical mines, rock chip, soil and stream sediment anomalies have really been targeting the methinibed sedimentary contact of the granite. There's been almost no exploration within the granite itself. So it's a very much a large scale opportunity for us. Moving on, our project in Western Australia is very much a blue sky project. Thanks, Elaine. And it's located immediately south of De Grey's Hemi project. There's been very limited historical exploration on the ground that we control and have applications over, although historical sort of surface geochemistry work by De Grey and others has identified some pretty significant soil and stream sediment anomalies for gold, arsenic and lithium. So that's, in a nutshell, that's who we are. We're hoping to float the company within the next month. If anyone's interested, they can visit us at flynngold.com.au.
Sam, thank you very much for the presentation. I've had a bit of a note from Andrew that this is the first time we've had a Tasmanian project on 5 at 5. So maybe start off with a question there. Clearly environmental, not the first and not the last time I'm sure you're going to answer questions on the environment considerations in Tassie. What do you need to do there at the moment to maintain your environmental obligations, and what do you have in the future in terms of permitting ahead of you?
We have the same environmental obligations that every other company has in every other state in Australia. Tasmania is a Tier 1 mining jurisdiction. Mining has been important to the state for since pretty much its inception. Mining currently accounts for 60% of the state's export revenues. So it's very significant, and the state government supports junior explorers and miners such as ourselves with drilling grants, grants for helicopter use. Most recently, the state government presented a loan of about $10 million to King Island Shearlight to support their development of the tungsten mine there. So, you know, they're highly invested in the sector. The environmental story is a legacy of some dam protests back in the early 80s, late 70s. But really, the Tasmanian government has been very effective at separating its jurisdictions. The mining centres in Tasmania are set aside as special interest zones for mining and primary industry like forestry. So, you know, we think we're very much in a safe sort of jurisdictional space there. And that's not to say we don't have to jump through all the appropriate and necessary environmental hoops. That's as it should be to get anything done, but really no different to any other advanced country's attitude to mining in the current environment.
That makes a lot of sense. Thanks, Sam. Angelos, you've got some questions for Sam?
Yes, thank you, Sam. Again, focusing on your Tasmanian project, that seems to be the more important element of your strategy going forward. The question always with historical drilling work is the possession of the drill core and reliability of the records that you have acquired with the project. To what extent you have been able to verify the records and the historical drilling in order to come up with your evaluation of the prospective targets and drilling strategy? And following on from that, assuming that we are successful in raising the 9 million or so you are targeting with your IPO, how much will that take you? Where will that take you? You know, what sort of drilling will you be able to finance, and what stage do you expect to take the project to?
Thank you. Very, very good questions. The Tasmanian Ministry for Mining, the MRT, has an excellent core library located in Hobart. All the historical core for that project and any of our other projects is currently located in that library. So we have access to that, and we have the ability to use that core, re-assay it, log it, do whatever tests we want on it, as long as we leave some sort of representative piece behind. The issue we have in terms of using the previous results, we have had in-house resource studies completed on that project, and remembering it's a very limited drill program. It was only covering 150 metres of strike, but there is a non-JORC resource attached to it. But because the drill company the company at the time didn't use standards, then those assays can't be used for reporting JORC results. So we're obligated to at least, very least, re-drill one or two of the holes to confirm those results. We have, as part of the resource study, we have re-assayed some of the core, and the results have been consistent. But that is essentially the process we have to go through. In terms of the budget, we have in plan about 3,000 to 5,000 metres of drilling as the first pass program to test, firstly validate the original results, and then work outwards along strike and down dip to continue testing those. The the strike extent of the deposit. That will get us through the first year, and then assuming everything is positive, then we'll have enough money left to continue that drilling and do some preliminary metallurgical testing as well.
Okay, and I have another question with regard to the team. What sort of experience do you have in local Tasmanian operations, and whether you had similar experience across the water to the Victorian fields that could be transposed?
Yeah, no, we have an excellent team and a very supportive management. Myself, I'm a Tasmanian geologist with 30 plus years experience globally. I've enjoyed success in the copper and gold space, developing or discovering large type systems such as this. We have our key exploration manager in Tasmania is also Tasmanian with a lot of global experience. And I think one of the features that we're very fortunate to have is a gentleman by the name of Doug Kerwin on our advisory board. Doug is he's probably the preeminent exploration geologist of our era. He has some 50 years experience, vice president of exploration for Ivanhoe Mines, involved in the discovery of the Hugo Drummond deposit in Mongolia, attached to or associated with Oy Tolgoi, and numerous other discoveries, including in the Cloncurry Belt. There's been a lot of activity, obviously in the Victorian end of the belt, and we are able, given the current travel, and historically we're able to draw on consultants and highly experienced geologists to assist us managing and designing our exploration programs down there.
Yeah, thank you.
Sam, thank you very much for the presentation, and looking forward to seeing you up on the ASX shortly.
Thank you, David. Thank you, everyone.
So one last polling question to wrap it up. Given that I'm based in the UK, I'm a little bit concerned about when I can get my next haircut rather than when we can have international travel again. But we're going to do a poll asking when are you planning to do international travel again? It's been over 12 months since I last got on a plane, so I'll be very interested to hear what you guys think. Elaine, can we pull up the final poll? There we go. So international travel within the next 3 months, and then 3-month blocks until over a year away. Thanks very much. Angelos, just while we're voting, maybe you could just talk through some of the challenges that you have not being able to travel. How do you do your DD, meeting management teams, site visits, and what have you done to mitigate that?
Yes, thank you. Well, I guess we are fortunate to be on the buy side of the industry, where we have developed a track record and expertise, as well as knowledge of a large number of companies over the years. So there hasn't been really any disruption to our activities through COVID, given that the industry has reverted to video conferencing and telephone conversations. So we have been able to continue our contact and our follow-up with existing investee companies, but also to meet new companies that we hadn't met before and go through their projects and plans. And also, I think to a fair extent, the smaller end of the spectrum in our industry is less reliant on massive operations. So having mobile drilling crews deployed in remote operations has been fairly safe and efficient, even through the COVID restrictions. Most countries have allowed it to take place as essential services. So there doesn't seem to have been very much disruption in that regard. There has been some more disruption affecting the operating centers, the larger companies that are producing, but it seems to us that most of the companies have been able to deal with the safety precautions and the protocols.
Oh, definitely. And maybe just a 30-second answer from each of our panelists about how they've managed. Andrew, maybe starting with you. Just a quick response on how you dealt with the challenges around travel. I think you're on mute as well.
Yeah, no, sorry. So on travelling to PNG's obviously been difficult. I haven't been for 12 months, but our 2 expats do very long rosters and spend 14 days in hotel quarantine each roster. So it is challenging, but we're managing through and looking forward to a day when we don't have to all do that, I guess. Within PNG, we do, we just have very strict COVID policies and procedures and regular testing.
Peter?
Yeah, so reasonably similar story. Obviously, all of our projects are Australian-based, the 2 centres being Queensland and Western Australia. So we just split our exploration teams very early in the piece into those 2 regions because they couldn't travel. And did that, and same with the drillers, same sort of concept. With respect to which everyone's doing with board meetings and management meetings, it's all the same as this. We've just straight away gone to virtual.
Sam, I suppose you've had to think about splitting up your team as well from WA versus.
Yeah, no, we exactly. No, we've had isolated teams in each location, and they've been free to do all the work they need to do. They've just had the benefit of not having to trawl me around site, and they seem to always have their phones turned off. So fairly typical sort of exploration geologist behaviour.
We all deal with the COVID challenges in different ways.
Perhaps David, could I just make another quick
Please.
point? I think the other thing we've been fortunate in the mining industry more generally has a culture of being able to work remote and be fairly resourceful with good systems and processes that have been around for many years. So my feeling is that I don't think it's been as disrupted as many other industries because we've had solutions.
Yeah, I think that's a really fair point. Well, thank you for that, Elaine. Maybe we can pull up the results of the poll and see when everyone thinks that they're going to be getting on a plane, and a fairly mixed bag there. Maybe a slight bias to further away than the nearer term, but yeah, I'm certainly looking forward to getting back on a plane. Can't believe I didn't ever miss Heathrow, but there we go.
What did you pick, David?
I went 9 to 12 months, but I'm sort of hoping that I can use my SCG membership at the end of the year. But at this point, I am still firmly locked in London. So there we go.
I have to admit, I'm much more optimistic for summer travel, but let's see. Maybe it'll slow down soon.
Fantastic. Thank you very much, everyone. And yeah, I got to say thanks again on behalf of the AMA. I'm sorry, London Mining Club, formerly called the AMA. Looking forward to hosting more in-person events when we're allowed to. And I might hand back to Andrew to wrap up.
Okay.
Thanks, Angelos.
Thank you once again for being a great host, David. I'd just like to go and thank our guests. I'd like to thank our sponsors, Kingston Resources, Zenith Minerals and Flynn Gold, as well as the Resource Global Network. We'll be back next week. Until then, stay safe. Thank you.
Bye for now.